Hi, this is Walter Montero, and you're listening to this week's edition of the Real Estate and Mortgage Show. Hello, hello, hello. It's Walter Montero here, and welcome to this week's edition of the Real Estate and Mortgage Show. I want to thank everybody so much for the support that we're getting over the last few weeks. We're getting a whole lot more listeners than I thought we'd get, but nonetheless, I'm glad that you're enjoying the information. And nonetheless, I just want to thank you again. I'm quite humbled by the amount of listeners that we're getting. This week's topic is the 10 Commandments of Home Buyers, or the 10 Mortgage Commandments, some people like to call. There's a few things that you should be aware of as a home buyer that you should not do once you get a pre-approval for a mortgage or once you start the home buying process. Because if you do this, then if you do any one of these things, it could really mess up your ability to get a mortgage or to get pre-qualified for a mortgage. So I'm just going to go over them one commandment at a time and make sure you're covered so you know exactly what's going on and how it may or may not affect you in the home buying process. So commandment number 1 is thou shalt not change jobs, become self-employed, or quit your job. Now, the reason you don't want to do that, of course, is you want to display to the bank that the information that you put on the application is accurate, number 1. And number 2, they are looking for some stability in terms of your income. So the last thing they want to do is they want to see you change jobs where all of a sudden, you go from a permanent position to a probationary position, because it obviously puts your job security in question. And of course, when your job security is in question, the bank is very uneasy about giving you any money, so they may pull your approval even after you've been pre-approved. And then of course, the last thing you want to do is become self-employed during that time as well. You want to do it after, but don't do it until your mortgage gets funded. All right? Commandment number 2 is thou shalt not buy a car, a truck, or a van. Otherwise, you could very well be living in it. The one thing about qualifying for a mortgage is they use a ratio of your income. So the way they measure that ratio is called a TDS and a GDS. The GDS stands for gross debt service. TDS stands for total debt service. That means that a percentage of your income needs to be within a boundary that the bank is comfortable with. So when you got pre-approved, they based it on the debts that you owed at the time of the pre-approval. If that changes between now and the time you actually close on the house, that means that the mortgage that you got pre-approved for, you may no longer qualify for it. So at the end of the day, you think you got a pre-approved mortgage and you don't because you went and did this. Okay? Commandment number 3 is thou shalt not charge cards excessively or let your accounts fall behind. Okay, so there's a couple things that you want to make sure you're doing there. Is obviously you want to control your spending. You're going to become a homeowner, so you don't want to get into more debt than you already are because it could skew your debt service ratios. The other thing it could do is it could affect your credit score. Okay, so and that's why we don't want to see any of those accounts fall behind, because a lot of lenders have a certain standard of credit score that they want you to have in order to qualify for the mortgage. If you fall below that standard, then you no longer qualify for the mortgage. So be very, very careful in using credit cards, and more importantly, make sure that you're paying those bills on time. Next commandment is thou shalt not spend the money that you have set aside for closing. Okay, pretty self-explanatory. That just simply means that you shouldn't be spending your down payment, number 1, and you shouldn't be spending your closing costs. You need that money, and that money needs to be around. It needs to be in your bank account so that the bank sees that you are prepared to go to the closing table. The next commandment is thou shalt not omit debts or liabilities from your loan application. Okay, so what that means is don't lie. Make sure that everything you owe, every debt that you have, put it on the loan application, because once you don't, the lender starts to question whether you're telling the truth from the get-go. Okay, so you don't want to leave any of those things out. Make sure that everything that you owe is on the loan application, because I'll tell you what, they're going to find out once they run your credit bureau. Okay, next commandment is thou shalt not buy furniture. Okay, the reason we don't want you to buy furniture is expensive. So we don't want you to spend that seed money that you need, your down payment and your closing costs. And more importantly, you don't want to take on more debt, because, as I said to you, you were qualified based on the debts that you had. So if you buy furniture that don't pay a cent event, or something along those lines, that's the last thing you want to do in terms of between now and the closing. If you want to do it after, but don't do it before. Next commandment is thou shalt not originate any inquiries into your credit. Okay, so this is basically when you go around and shop for a mortgage. If you have a mortgage broker shopping for you, that mortgage broker will pull your credit bureau once. So every time you have your credit bureau pulled, it always affects your credit score a little bit. But if you have your credit score pulled many times, so you become a credit seeker, that affects your credit score, especially if your credit is a little on the tight side. All it takes is a few inquiries to pump it down. So be very, very careful when you're shopping for a mortgage. That's why it's always important to use a mortgage broker. Okay, when you use a mortgage broker, the broker can do all the shopping for you. Okay, he can go around, he's pulled your bureau once, and then the lender will see it. So make sure that you do that properly. And by the way, a little plug for a mortgage broker. My wife Karen, she's an excellent mortgage broker. You can find her online at www.mrfinancial.ca. You can just go on there. You can get a pre-approval. You can click on the apply online, and she'll get back to you right away. She can let you know what you qualify for. Just a little plug there. But nonetheless, it's something that'll probably come in handy for you. The next commandment is thou shalt not make large deposits without first checking with your mortgage broker. So the one thing that you want to make sure of here is don't, if you're sitting on the money on your down payment in cash, and all of a sudden you put it into your bank account. We're in very nervous times these days. Banks get very nervous about large deposits. They want to know where that deposit came from, why that deposit was there. They want to make sure that it wasn't borrowed money, that you didn't go to some cash advance place and just borrow that money. If it's a gift, okay, then you need to disclose that it's a gift. But the last thing you want to do is play with large amounts of deposits going in and out of your bank account, because your bank's going to ask for a 3-month statement in terms of where your down payment is sitting. If they see a lot of money going in and out, it makes them a little nervous. They want to make sure that that money is your money, and if it isn't your money, then they need to know that if it's a gift, where it's coming from. So be careful with big deposits going in and out of your bank. The next commandment is thou shalt not change bank accounts. Of course, another big thing about lenders is they want to see some stability. If you're changing a bank account, like I said, they're looking for a 3-month history. You don't have that 3-month history to show them, then they're going to be a little nervous about it. So the last thing you want to do is change banks. You want to change banks, change them after, but don't do it between the time that you got pre-approved to the time you close on the house. And then the last commandment, the 10th commandment, is thou shalt not co-sign for a loan for anyone. So if your brother or your sister or your mother is in the market for a car and they need a co-signer on a loan, the last thing you want to do at this time is co-sign for that loan. Because what happens is their debt becomes your debt. And that, again, will skew your numbers in terms of qualifying for your mortgage. All right? Don't co-sign a loan between that period of time. For that matter, be careful co-signing a loan no matter what. But anyway, those are the 10 commandments of home buyers and mortgage, or like we call the mortgage commandments. Hope you enjoyed them. And we're getting pretty close to the Christmas season here. Next week, we're not going to have a show. So that's going to be on the Boxing Day. Here in Canada, obviously, we celebrate Boxing Day. So it's a holiday. So our next show won't be until January 2nd. So I'd like to wish everybody a very Merry Christmas and a very prosperous New Year. And again, if you have any questions for me, feel free to email me at walter@maximumresults.ca, or you can visit my website, www.cambridgehouses.com. Thanks very much and have a great Christmas.